So the minute I can see a chart like this, I can already see where the scalp is, right? I can see that there's going to be a scalp trade here, for example. There's going to be a sell trade there. If you can't see that, you're in trouble, right? You're in real trouble, because that's dead obvious. The whole market flips over here, and I know that to the right-hand side there, there's probably going to be a scalp buy. As we go forward, I can see that if I could get a trade in here, there's a scalp buy. There's another scalp buy opportunity in there, isn't there? And as I said, when you're looking at localized highs, you can see quite clearly that there's going to be a scalp sell somewhere else in here. Now, one of the things you'll start recognizing is those occasions where the red line makes a lower low or a low against the other two lines. These are all scalp trade potentials. So for example, this is a brilliant example of a scalp sell in bonds here. You can see the red line's going up, this is going down, and this is going down even faster. That is a great scalp trade. It really is world-class opportunity to scalp. In other locations where that scalp exists, you can see we actually get a little cheeky turn up here where the other two lines are dropping on those two candles there. So that's another scalp opportunity to get that bond scalped into the markets. Now this is a 5-minute chart, so you're getting a fair bang for your buck on these scalps, right? It's not just a tuppence halfpenny type trade. You're getting a fair bang for your buck. And you can see in here, the red line's dropping after a new low is put in, and against the other two lines that are both rising very aggressively. That is a great scalp opportunity to deal. Now you should be able to trade this and think about this blind in terms of some of these locations. If you can't see it blind, you won't see it with the price on because it's irrelevant, right? So when I look at those as scalp opportunities, how did those scalps play out? So if I sold this bond at that price, did I make any money? If I sold bonds at these two prices here, did I make any money? If I bought bonds at the close of that candle, did I make any money? Well, what was my maximum drawdown? Maximum drawdown in this trade at 20 was 21, so I had a maximum drawdown of one single tick. My maximum drawdown here was one tick. My maximum drawdown here was 31s down to 28s, was 3 ticks. So I've had a maximum drawdown of one tick, and 3 ticks on those trades. In other words, you never had to aggressively attack any of these trades. If you sat on the bid or the offer, you'd have got filled on every single one of them, wouldn't you? Because the price did go up one or down one tick, didn't it? So you always got filled. So in other words, passively attacking into these trades, putting that bid into place, you got filled on every single one of them. With a maximum drawdown of just 3 ticks, this sell trade here went from 20 down to 26s for nearly $1,000. This sell trade went from 10s down to 3s, 7 ticks, perfect. This trade went from 31s up to 10s, perfect. So you've got nearly $1,000, maybe $300, maybe $300 or $400 there. So you're about $1,700 with a maximum drawdown just now of $90. That's not a bad outcome, is it, when you think about it? It's not a bad outcome at all when you're starting to recognize some of these as stories. Now, that's without even referring to whether the dollar was with or against us. That was just recognizing some value. And this is one of the things that we'll be doing this week, is trying to just be able to spot prices without ever even referring to price charts. In other words, gaining so much confidence as an R-squared trader that you're left looking at the markets going, this is a walk in the park. Because value is not necessarily anything to do with price, and therefore the price chart has very little reference, very little advantage to us, except for the fact, of course, we need to see if the value is in the price in certain circumstances, right? So when we look at a chart, and I start zooming into this chart here, I can see several scalp opportunities in line with that, in line with trend, depending upon what the trend is and what I'm trying to accomplish. And I can do that by having some sort of ready reckoner in the background, allowing me to make that type of trading decision. So it's very, very important that we can start to see as it's happening on the right-hand edge and how it's developing out. Now, as I said, one of the things you can do in the past is, just if you're not getting enough examples of this, is to drill it down into a 1 minute chart so you get a lot of examples. But the intention is to go back to that 5 minute chart in due course. And what you're looking for is, all you're looking for is to try and find some great examples. Like you can see this, you can see some incredible examples here. Look, red over purple over blue, and the orange line's going straight down. So you know that there's a sell trade here. You know there's a sell trade in that candle. It's 100%, almost 100% certain. In fact, the sell trade actually started to develop on this candle here. So when you're looking at that trade area, you can see you had the opportunity just to be passive into that trade. Now I don't have to see the price to know that that's a sell. But at least I've now got the opportunity to go to things like order flow and find that voltic, find that lean, find that flip in the book, and start executing into this area, because the red line flipped at that stage there, didn't it? The red line flipped there, and it was in the direction of the markets at that stage. Perfect. So I'm going to start thinking about that as an offer watch trade. If I look at whether that worked out for me an offer watch, you can see what happened. So if this is now starting to form an offer watch, I am going to be able to start putting in some offers, right? I'm going to put in some offers. I'm going to put in some offers. And this is the trade that really catches your eye, because now that you can see the price action, this is a no-brainer trade. This is the bond equivalent of an arbitrage right there. This is like the bond equivalent of the arbitrage trade, because the lines actually are going down at that stage, not up. So that's the arbitrage one. That's the one you want to whack in the big volumes into that trade. Now, did it work out? Not really. It went from a high price of 19s to a low price of 14s. It made five ticks on a good size trade, but that's not a bad trade. And then you can see there was a little arbitrage again there. Did that make any money? Well, it made 3 ticks and it scratched you out. Remember, if you don't get filled, you don't get filled. You don't chase these trades, guys. You do not chase these trades. Is this an arbitrage trade? Not an arbitrage, but is it a sell trade? Sure. You can see that the red line's going up, but the purple line's going down, the blue line's going down, and the orange line's macro sell side, so that's a sell trade as well on a 1 minute chart. You don't chase it. Well, they're all good-looking little bits of business, aren't they? Every single one of these trades is a reasonable bit of business. None of them would have lost you any money. So long as you're nice and passive, waiting for the right trade, waiting for the right storyline to develop. The only challenge you've got is, in this example here, is the red line was making a significant push higher. So I would be a little bit cautious, and that's why this sell would not be particularly keen to be selling. The price should be divergent against the red line on a macro chart basis as well as a micro chart basis. So when you see the red line is as high as it was before and it's basically just mirroring price, you don't take that sell. But these sells you can take, because you can see in the background the red line is now diverging against that overall trade, and therefore making sells into those areas is pretty straightforward stuff. Now we've lost the value here in the short term, so there's not going to be any sell coming up anytime soon, but that's good news, isn't it? That's good news, because, well, I can take a little break from trying to sell bonds, right? I know the market's probably going to go higher, so I can take a little break from trying to sell bonds, and I can always, well, I'm not going to start looking for a buy trade anytime soon, but you get the basic idea that the trade is not on the screens at this point. So when you see this on a 1 minute chart, you can start to recognize some of these opportunities. You know, you can start zooming out, you can zoom in a couple of times, you can see there was a little cheeky opportunity in there. There was a little tiny bit of divergence on a 1 minute chart there for a sell trade off the 11s. And my goodness, did that pay out $300 in about 7, 8, 9, 10 minutes. Great little cheeky trade, great little outcome, making a little bit of cash. Into the bottom edges here, you can see a little bit of an arbitrage trade as well. And you can see that there was a little arbitrage there with the red line now going up in line with the blue line, purple line, orange line. So there was an arbitrage buy trade in there, wasn't there? And that little arbitrage buy went 29s up to a high price of 8s. A brilliant, quick trade in there, wasn't it? Brilliant, quick trade. Just coming into NYMEX Open, guys. So it's just about putting in the work, guys. It's just about putting in the work. We were right about not selling that bond. The price did carry on through a little bit further. So that was a good decision. Into the NYMEX Open, dollar is offered at the moment on a macro off those low prints of 72. I'm looking to see if we've got any early indication about what the market's fancy from this. couple of aggressive buyers coming in just now at that 88. So I'm going to see if they get trapped on this opening bell. I'd rather be buying oil, of course. That would make an awful lot of sense. You can see why you'd be wanting to buy oil if you're not already long oil. You should be. You can see there's a very large divergence off these low prints here, and you should have been buying into this for the cash open, yeah? There is no other trade you could be doing, so that would have been your last buy trade there. So probably buying into that level too. Does that make sense to everybody? There was opportunities in here, but you would be buying into this slow trending down move, whereas in this one you're actually buying and the dollar's actually flipped at that stage. So there's an easy buy trade there. Yes? So you can see the levels, you can see the narratives, you can see how easy it is to be long the oil markets in those areas. And again, a nice easy winner for anybody that's in the oil trade at that stage. In terms of your value lines, you can see not very much in terms of your overall values. It was driving down, so you should be buying it anyway. And that's all you can do is buy it. And sure enough, you've just went 70s to 20 for $500 in 60 seconds. $500 in 60 seconds on that trade, which is pretty good, right? We were definitely right about not selling the bond, weren't we? The bonds went, when we talked about not selling bonds, it was at 22. It's just traded 131 evens. So we were 100% right about not selling bonds. Perfect example of a little perfect little trade there, guys. Obviously the dollar at the moment catching quite a strong offer. You can see there's been a nice recovery in the pound and in the euro and the yen at the moment, so obviously that's keeping the bonds bid, and that's obviously why we're getting the drive higher at this point. It is an offer watch, but obviously it's difficult to get exactly a price because we've got nothing in the background that has any relevance to this wholesale 131. So we'll just have to let it keep going. Happy with that. The higher she goes, the more we like it, guys. So that was a great shout, wasn't it? We told you not to buy it, not to sell it, sorry. We told you that we weren't reselling this. The price was trading 22s, it's just traded 4s. Is that not incredible? Absolutely. So, you know, you get the basic idea that the most recent is the most important. The most recent dollar move was this drive down on the dollar, drive up on the yen. And obviously that's why we've been very, very passive. That's why we haven't taken the trade. I told you that that's not a sell. And obviously we've just traded through 131s. It's still not really a sell in the short-term swing. Again, using that localized high trade, it's still not really a strong sell. So I'm happy to let it go through. If I decided to buy it off 22s, I'd be absolutely jumping for joy at a $500 winner, right? So you get the basic idea. Again, missing into that sell is perfect. Just by checking out the short-term value, the values in it. If you take it up to a 5-minute chart to recognize what's happening in that short term, you can see that there really isn't a lot in it, but it's starting to brew in the background. It's starting to brew in the background. Absolute classic example of how not to lose money, just by being very, very passive, knowing what's going on in the localized movement of price, and just accepting the localized movement as the main movement. And that dollar offer allowing us to avoid selling into that trade, and that's why we've not lost any money. Perfect. Perfect, 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 perfect. And that's the same reason why the gold hasn't been a sell either.